What is up? What is up, everybody? Welcome to today's live stream. Today, we will be talking about a very important question, a question that comes up a lot, a question that says, how much should you risk? How much capital should you put at risk? Should you go big? Should you go small? How much money are you really putting at risk? We're going to discuss all that. But before we do, type into the chat. Let me know where you're from, where you're watching from, and make sure that you like it and subscribe while you're here. That's going to help blast this out to the maximum number of people. So all that said, let me get my screen share up here and going. I want to share this screen over here. And I want to share with you. Um, well, we'll get into the site in a moment, but the first thing that you're going to want to figure out when you are position sizing, and there's a lot of different ways to figure out position sizing. Well, we're going to talk about in this live stream is like my personal favorites. So that way you're getting that level of insight into it. So when you're thinking about position sizing, there's really two main questions that I like to ask myself first and foremost. And those questions are uh, where am I going to get in? And where am I going to get out if I'm wrong? I always want to answer those two questions ahead of every single trade that I'm in. Right over here, you could see some of the trades that I'm in right now, and each of those had to answer that question, right? Where am I going to get in? Where am I going to get out if I'm wrong? So, and you can see that with the green and the red sections over here on each trade. So, where am I going to get in? Where am I going to get out if I'm wrong? It's a very important question to answer on every single trade. So that way, number one, you're starting to figure out how much you're going to risk on that individual trade, right? Like so, for example, with Upstart, my first ad was right over here, right at 313.70. So, and my stop where I would exit the trade if I'm wrong was started down here at 286.40. So you could see very clearly, very easily that between my entry price and my exit, if I was wrong, I would be risking 8.7% on just that one trade. Like per share, I would be risking 8.7%. Yeah, that's the first thing that you're going to want to figure out on each trade. Where are you going to get in? Where are you going to get out if you're wrong? The next thing that you need to figure out is how much capital do you want to risk on this particular trade? And I like to think about it in percentages too. So, regardless if you're trading with $10,000, $100,000, $1 million, more or less, think about it as a percentage. And if you are thinking about it as a percentage, then as your account grows over time, you're still able to think about it in terms of percentages. And it helps out so much because, like, as the numbers start to grow, uh, you're not anchored to a specific dollar amount. Like, oh, like I could only risk $100 per trade. I could only risk $1,000 per trade. No, like you're risking 1%, let's say, per trade, and that scales with you over time. So, first two things again, where are you going to enter? Where are you going to exit? The second thing is how much capital do you want to put at risk? And you might be asking yourself, and let me know, type into the chat what you think of this so far. But the question that you might be asking yourself is that seems like a lot of math. And you're right, it is a lot of math. And the when I first started doing that exercise, I was okay at math. Like I was never like great at math, but I was doing those kind of calculations by hand, pen and paper, and then eventually I put it into a spreadsheet. And then, thankfully, I have a very good friend named Jarek who helps uh, build the website with Wealth. So thank you, Jarek. One of the things that he helped build was this free calculator that I'm going to show you now. So if you go over to mariwealth.com and you just scroll down all the way to the bottom of the page over here, you'll see this link right here for position size calculator free tool. This tool is absolutely amazing. So you pop this up and you get to add everything right in here, right? So now let's, for example, say that you are trading with $10,000. So you have $10,000 and you want to risk 1% of your capital on this trade. And now let's use Upstart as an example, right? So let me just drag this off the screen, switch back over here, and put this back on the screen. And by the way, that this is basically the process that I'm using on every single trade. I use this calculator all the time. I was using it earlier today. Um, Scott says that he likes to use 50% across 4 positions, and you could do that too. You could. There's a few different ways to think about position sizing. You could definitely factor in percentage allocation across a certain number of positions too. We'll get into that. For right now, let's continue with this example. So, um, with with this example here, actually, let's bump it up to 100,000 and make it a little bit easier to divide into. So let's say you're looking at Upstart and uh, we were going to enter down at um, 313.70 where I got in, and my initial stop loss on this was 286.40. So what this is going to tell you, so far, it's telling you that you have $88,500 remaining from what you started with if you go in with this size. Okay, great. But what's more interesting is this down here, right? So it's telling you that given how much you want to risk 1% of your capital, so you're risking a grand, and you would be able to buy 36.6 shares. If you want to do fractional shares, great. If not, you could, in this case, I would round up to 37, or maybe to have like a round number, like if I wanted to have 35, like something that's a little bit easier to remember, something that's easier to scale out. Like maybe I'm rounding to 36, maybe I'm rounding down to 35. Pick well what you want. It's letting you know like how much you'll be getting. It's telling you the position size, like so how much of your capital would be at risk. So to go back to Scott's question from earlier, 50% across 4 positions. So if you have 100 grand and you see that this one position is going to be 11.5, just about, and then that's telling you that, yeah, you have room to be able to buy this amount with that kind of allocation, right? So you could even go a little bit bigger than what we have here. So all that data is available right here for free. Um, And then it's telling you how much dollar you're risking per share, how much per on a percentage basis. So between your entry point and your stop loss, you're risking 8.7%. And perhaps most importantly is, uh, or really yeah, I'd say most importantly in this over here, we'll talk about this in a moment. But this dollars risk on the entire position, it's letting you know that you're risking that $1,000. So let's say you wanted to, market's improving, you want to bump it up to 1.5%. Now it's telling you, oh, now you're risking 1,500. and it adjusts all of the how many shares to buy, your position size, all these numbers get adjusted. But let's say you want to just risk that same 1%, but you want to have a different stop loss. Maybe you wanted to set your stop loss tighter, right? Like I eventually raised my stop loss on Upstart, if you could see it over here, to 303.90. So uh, let's bring the calculator back up. So let's adjust this to 303.90. And now you could see, and now all of a sudden, instead of buying, what was it, 30 something shares before, now you're buying 102 shares. But you're still risking the same amount. That is the power of knowing where you're going to get in, knowing where you're going to get out. Uh, if the trade moves against you, and risking and doing this based off of a percentage. And you don't have to be a mathematician to do it. You just have to plan ahead and know how much capital do you want to put at risk, where you're going to enter this thing, where you're going to cut your loss short. And the calculator does the rest. Now, what's the what's this thing here, the trade emotionator? And now it's telling you that you're in the sweet spot. So what this is telling you, it's telling you a couple of things. Um, and it's taking it from the perspective that this is a trade that you're going to be holding overnight. So, uh, for you guys in the audience that are live right now, and I'll put this question to everybody that's watching this as a recording later on. Uh, do you hold trades overnight, or are you more of a day trader or a scalper? Let me know. Type it into the comments. With this part of the calculator, it's talking more about holding overnight. So more for swing trading purposes. So the reason why you could either be in the sweet spot, or maybe you have a really tight stop. Like let's say your stop was 310. It's letting you know that for to hold that whole thing overnight, it's super aggressive. And the reason why is because you're even though you're starting out by risking that same $1,000, it's taking up 85 grand, right? Like remember, we started with 100 grand, and you're trading with basically 85% of your account in this one trade all at once. That opens you up to tremendous overnight risk, tremendous gap down risk, and you could end up losing dramatically more than you ever intended. That's the purpose of this trade emotionator. So if you're betting too heavy, like if this, it doesn't mean that you can't use that as your stop loss, but it's making you aware that, hey, if you're going to hold the whole thing overnight, that's very aggressive. Consider, and you may want to consider scaling down a bit as the trade moves on. Let's see. Well, what else? Yes. My next point. So we spoke about a lot here, right? Let's recap briefly. So far, we want to know a few things when we're going to position size. We want to know where we are going to enter. We want to know where we are going to exit if the trade moves against us and we're wrong. Cut our loss short. That's one of the keys to success in this game. We want to know how much capital based on percentage that we want to put at risk at any one time. Maybe it's 1%, maybe it's 2%, maybe it's 0.5%. The amount can vary. And for me, it does vary. And that's actually going to be one of the next things that I want to talk to you about. But you take all that information, you put it into the calculator. And again, for anybody that's new, that's joining now, again, welcome. Make sure that you like and subscribe to the channel. Um, the spot to do it is to go to marawealth.com. This is a free calculator. So you go to marawolf.com, you scroll all the way down to the bottom of the page, and it is right here. Right. So you just click that and it pops right up. It's a fantastic tool. Um, I actually think I have it open twice. Uh, yeah, it's so good. I opened up twice. Okay. Yeah. So now we've got the. So you go there, you open up the tool, and we also spoke about the emotionator part of it, and how manipulating your entry price and your stop loss will uh, allow you to buy more or less shares and still risk the same dollar amount. Now, one of the ways, right? Like now, I want to talk to you about going from good to great with your position sizing. So, take a quick drink. So, going from good to great, like if you got this part down, you're already miles ahead of where I was when I first started trading, right? So get that part down, like let that sink in. If you're a newer trader, like internalize this, ask a lot of questions, and again, like this alone puts you miles ahead. Uh, to go from good, right? Like this will get you to good. From to go from good to great, the next step of it is to start to figure out what percentage of capital should I risk on each trade? How much percent of capital should I risk on each trade? Maybe it should it vary? Uh, and my answer to that is yes. Yes, it should vary. So, for example, um, let me open up my playbook. If you were on the live stream yesterday, you got to see the playbook, and we spoke a bit about this. We're actually going to do a second live stream on this next week because there's so much in this playbook that didn't get to go over everything, but basically the way that I position size is based on some of the stuff in this tab here. And why don't I make this a little bigger so that way you could see it. This whole spreadsheet, by the way, is made available to our Mara Elite members, and it gets updated constantly with new um, formulas, trades, everything that I'm doing is in this spreadsheet, and so that's available to Mara Elite members. But um, the way that I position size on each trade is based on this formula here. Right? Maybe I made the screen a little too big. Um, let's zoom out a little bit. All right. Yes. So it's based on this formula here. The market condition times the trade grade tells me how much capital I should risk on this trade. So two factors, two big factors. Market condition, what's the market doing? How good is this trade? That equals the amount that I should risk. I think that that it actually took me 20 some odd years to arrive at this formula as simple as it is, but there's moving pieces in this formula, and it's brilliantly simplistic. So let me explain a little bit more about this formula and how you could use it yourself. So there's a few things in this formula. Um, let's start with the trade grade. So let's say you have like you do your research on the weekend or whenever you do your research. Maybe you're doing it at night. Maybe you're doing it in the morning. Maybe you're doing it right now where you're listening to this. But yeah, you're doing your research on your trades. uh, and you have a really great trade, you have a pretty good trade, and you have a borderline trade. Uh, you should consider assigning letter grades to them. Like, so you have your A setups, your B setups, and your C setups. That's what I like to do. And this is giving like the general basics. In fact, this rules list, like it's been updated since, but super general basics of what a criteria for an A level trade, a B level trade, and a C level trade. Like define what constitutes A, B, and C for you. And for if you find a trade that is an A level trade, I think you should be betting heavier on it, right? Like it's an A level trade. It has all of the different things that you look for, right? And there should be it should look like a bell curve where there's only a small handful of A level trades. Most trades tend to be B level trades, and C level trades, well, like you'll take them for special circumstances. If you find an A-level trade, bet heavier on it. But that's only one part of the equation. Then you have the market condition, right? So I look at market conditions kind of similarly, right? Like, but I'm using uh, a traffic light system, green, yellow, and red. So if it's a green condition where the market is trending nicely and trades are breaking out and they're doing well, then that's a green condition. So in a green condition, so like if you're thinking about the weather and you're looking out the window and let's say you have a sports car or a motorcycle or going for a jog, right? Like you'll be able to move faster if it's a bright sunny day and it's a straightaway, right? Like flat land. It's totally different condition if it's raining outside, if there's a blizzard, maybe you're dealing with a lot of hills, a lot of twists and turns. You're going to drive very different. You're going to have a different car, maybe to or a different mode of transportation, depending on how the weather conditions are. Same thing applies to trading. And that's how I gauge the market conditions and how it ends up being a factor in my position sizing. So for right now, the market has been very choppy, and like the S&P and the Nasdaq and all of them, they're trading under was trading under the 50-day moving average for a little while. So was in a red condition. And so even yesterday I actually started to move to a yellow condition because things were improving and stocks were breaking out and my portfolio's making progress. So that's where things started to change. And then I'm starting to allocate more dollars as the market is improving. So all of that, all of that gets factored into the calculator, right? So instead of risking 1%, maybe I'm risking 1.5%, maybe I'm risking 2% on a trade. And that's how you could go from being good to great by figuring out not just your position size, but how much should you be risking on each trade, evaluating each trade, evaluating the market condition, marrying the two, and then betting accordingly. Right, like a poker analogy, right? Like you would, if you have a royal flush, you would want to be betting heavier on that hand than if you just had like a pair of threes, right? Like it's the same kind of principle. So, and that's all the stuff that we teach inside the Mara Elite program, and we meet twice a week, and we do 4 hours of coaching every single week. So go check out the program. Like I can't say enough good things about this program, and it just keeps on getting better and better. Malwealth.com, go to services, click Elite Membership, and you could read all about the membership here, and you could even watch a video from some of our members. But let's take some questions here. Let's take some questions. Um, Here's a question from Scott. Scott says, "How do you handle averaging up and pyramiding?" Great question. So, I actually did that with Upstart. So the way that I handle it is, if I'm going to add to a position in Upstart, Upstart is a good case. Like it's one that I haven't pyramided in like this in a little while. So I think that it's a good example. So Upstart is a stock which I consider to be a true market leader for a variety of reasons. We don't really have time to go into the whole true market leader definition right now, but very simply, it's a leading stock in the market, blasted off on huge volume, and it has many of the leading stock characteristics that I look for. So when the market was correcting and I saw it pulling back and getting support around here at that purple line, that's the 21-day exponential moving average. I saw that and I saw a number of setups. I'm like, wow, that's pretty strong. I'd like to find a way into this. So the first way that I found a way into it was seeing it, was kind of like drawing like a straight line across over here and seeing it find support with the notion that this is a leading stock. It's outperforming while the market is getting getting beat up. If I enter above here, it should hold this level if it's going to work. So that was my first ad. Then I saw it starting to trade sideways a little bit more and tightening up. And I'm like, wow, so this is a leader. If it continues to go, it can go quickly. And at the same time, I'm starting to see stocks like AFRM start to go, stocks like Net start to go, and a number of others. So that's where I was like, okay, let me see how it's continuing to evolve, right? And that's part of it too. How does this trade evolve? So I drew this descending trend line, and I saw it tightening up in that area over there. And I'm not just doing this on the daily time frame. I'm also taking a look and seeing how do things look on a 30-minute time frame. So I come down here and I see, oh, you know what? This kind of sort of looks like an inverted head and shoulders pattern, when that being the neckline. And when I start to see several patterns and fractional patterns begin to emerge, then that's something that gets me interested a lot more. So when I saw that, and I saw that, yeah, there's a minor level of support, of resistance rather, right around here, and you could see that dotted line. Um, that's interesting to me. So let me add a little bit right there, and if it continues to follow through, then I will still scale out. Well, like, something that I love to do is to scale out into strength as well. So I added there, and I got to take a little bit off here and a little bit off there. And now I'm still playing with uh so I've lowered my cost basis. I have more of a position, and I get to really play with the house's money at this point. So that's how I like to average up. I like to see another setup. I like to see another entry point that has confluence levels across time frames, and I also like to see uh, support levels that have confluence across time frames, like this one does over here. You could see it on the 30-minute time frame. You could see it pretty clearly on the daily time frame, like you have the 21 EMA now supporting that area, and it also works on the weekly time frame. It's below this week's low. So that's how I like to pyramid. Um, believe I answered your other question in here too, Scott, about scaling out. So you're trying to build an Excel journal. That's fantastic. I love it. However, I'm finding the formula is beginning to become quite complex, primarily because first in, first out shares and method. Yes. So the way that I handled that, and the way that I handled it with Upstart, is I'm actually treating it as two separate positions. So let me zoom out. It's a little too big right here. So view, zoom, uh, do 125. I think that's good enough. So I have two separate positions in Upstart. One started on the 7th, then the other one started on the 12th. And even though I'm treating them as one trade, like the way that I'm managing it, the actual positions are being managed separately as far as the spreadsheet goes, and that helps um, for tracking purposes. And again, that this spreadsheet is made available to the elite members. So if any of the formulas are challenging, you could uh, become an elite member. You get the spreadsheet sent to you, and then edit it to your heart's content. Um, and it's great. It's a really great way to collab. Another question from Scott. Scott, you're on fire. Let's see. I'm seeing today as the third follow through day, really, on the QQQ. Let's pull up the cues. Let's pull up the cues. All right, so third follow through day. All right. What are your thoughts? I know it's outside the scope of position sizing, but we are currently talking about A, B, and C trade setups. Yeah, I think that's fair, and we're actually in the yeah. Well, we kind of casually moved into the open Q&A portion of the live stream, but yeah, now we could talk about anything you want. And also the like if for everybody that's here that's live, again, thanks for being live, and make sure that you do like and subscribe to the channel, but also uh follow on Instagram, Twitter, stock twits, all these different places. But let's see here. So back to your question. All right. So, as far as the QQQ goes, the way that I'm defining a follow through day is for follow through days, I've adopted the way that O'Neill looks at follow through days. William O'Neill, the guy that wrote How to Make Money in Stocks and founded Investors Business Daily. The way that he defines a follow through day is that it needs to be uh, a day that is on the index that is up 1.2% or more on heavier volume than the day immediately before it. So mm, today on QQQ uh, would not count as a follow through unless if the volume picks up and is greater than the volume over here. That's one of the reasons why I like to look at an index versus looking at the ETFs. Let me drag uh, this over here. Right, so I like to keep all the indexes up. In TradingView, you only get volume on the S&P and on the Dow for some reason. But even on the S&P, right? Like fantastic day, up 1.6%. Many of the leaders moving and breaking out. So far, volume is kind of stinky, right? Like it's low volume. So this, despite it being getting the percentage amount, won't count as a follow through day unless a volume picks up. Like this is a follow through day candidate, right? Like based on volume. However, that day, the index was only up 0.45%. So, um, as far as follow through day goes, I would look for both being up 1.2% or more on, and it has to be on heavier volume than the day immediately before it. Uh, I look at follow through days, right? And so, coming from the background for anybody that doesn't know, I was a Investors Business Daily meetup leader for about a decade. Um, One of the ways that I've evolved is that follow through days are like one thing to look at, right? But it's not everything. There's many things to consider when gauging the overall market's mood, and we've talked about it in other live streams. But to be super brief about it, I'm looking at the direction of the major indexes. Are they trending up, down, or sideways? And I'm looking at it on monthly charts, weekly charts, and daily charts. I want to see uh, all three. Then I'm looking at distribution count, and I'm looking at it on the S&P and the Dow, but really because that's what's available in TradingView. Is that's the ones that give volume. Having the other ones, yeah, it would be nice, but as far as automation goes, having the automation is far better to me than having having to go and count, like, go, like, how much has the Nasdaq had? Like, I find it to be less important than to be able to move quickly. Uh, Something that bled over from when I was doing this part time. Now I'm doing this full time. Um, Stocks making new highs versus new lows. The quality of the trades that you're seeing setting up is a huge tell, and then the performance, right? Like, so over the weekend, we had 35 stocks that were setting up in some kind of a pattern, right? Like, just for, as far as the trade ideas go, not segmenting them out if they're A, B, or C, but just 35 total trade setups. As of yesterday, 71% of them were positive on the week. So most setups were working. That's something to take into account. So, yes, follow through days are important. They're a thing, but it's one part of the thing. It's one part of the entire tapestry of the market. Like, take the whole thing into account and don't get caught up in the minutia of any of it. So, uh, that's uh, that's about it. And we are a few minutes over. So, um, let me see. What? All right. Well, one more question from Scott. Scott, yeah, I love you, Scott. You're super active. I love this. So, Scott says that I am separating from the military and would love to find career opportunities in IBD, some other investing career, such as equity research. How would you recommend I go about this? Way off topic. That's all right. So, number one, thank you for serving. I actually have a cousin who's in the military as well. He's an Army Ranger. That just thank you for the service that you provide. Secondly, yeah, there's career opportunities at IBD. Place to start, I guess, go to investors.com and check out, well, what kind of opportunities they have. As far as trading goes, yeah, like, you don't need to have a special degree or anything like that. Like, if you just want to trade for yourself, well, like, well, what I'm doing, you don't need a special degree for it, but you do need education and mentoring and understanding that this is a career, right? Like, so, so many people get it into trading and think that like, it's a get rich quick, or that they could learn it in inside a couple of months, or maybe a year. And some people can, but go into it like you're preparing to become a doctor or preparing to become a lawyer, right? Like, that kind of a longer term trajectory, that yes, I'm going to learn. I'm going to go through coursework, learn from different people, get mentors, show me, well, what to do and how to do it, get a community around you. That's going to be the way that you will be able to grow as a trader and grow much faster. So, best of luck, man. Keep me posted with your progress. And yeah, well, let's last question. Got to call it a wrap here. From Julio. Julio says, "Hi, Mike. Great presentation. Oh, thank you. I really appreciate that. I am wondering if you take in consideration the stock volatility when you place your stop and position sizing. For example, using the average true range ATR." Fantastic question. I love it. So, I am taking into account the volatility. That's where, like, let's use a couple of other examples. Like, snow. Snow was a trade that I took this morning, right? So, um, if I every time I have that little paintbrush on, it always does that. Anyway, so if I'm entering at where did I enter at? 328.60, and my stop is at 307.90. You could see right here on TradingView that my uh, the distance between my entry and my stop is 6.3%. If I took a lower, right? So if I had put my stop down here and I'm risking 12%, then that factors into my position size, right? So if you remember, the way that I'm position sizing is to see where am I going to get in, right? So in this example, 328.60, and where's my stop loss going to be? So I started out with what? I started out with 307.90, right? So 307.90. And you can see that given that in this example, I would be buying about 50 shares. But let's say instead of 307.90 as my stop, I wanted to place my stop below here and play it for a little bit longer term of a move. And I want to make sure that, yeah, I don't want to get shaken out if it pulls back hard to the 50-day moving average and shakes up below there. Okay, fine. So 288. So instead of 307.90, right? You pay attention to this number over here, we change it to 288, and you can see now that I would be buying about 25 shares. But I'm still risking the same percentage of capital. I'm still risking, in this example, a grand. So yes, to answer your question kind of a long-winded way, does volatility play into account? Yes, and that's how. Right. So in a less volatile stock, if I'm able to tighten up my entry and my stop, I would have a larger size, but still risk the same percentage of capital. Anyway, I hope that helps. And if you guys want more content like this, like we do a lot of group coaching inside the Mara Elite program. Again, here it is. Go to marawolf.com, click on services. We do so much group coaching in here, and we're doing it all on Discord. So it gives us more flexibility where your microphone is open, where we're talking back and forth, and the other members too. The other members are fantastic traders. Uh, Several of them far exceed me at this point. But like but I love seeing that, and it's such a collaborative effort. Every weekend when we're talking, during the week when we're talking. Like yesterday's live stream, where we were talking about snow and Upstart and AFRM and like different ways to add to these. Another guy like trades options, and he was giving his thoughts on how he would manage some of these ideas. It really is fantastic, and you end up getting so much inside the program. There's the coaching, there's the Discord channel, there's the uh, all the different pro tools, including the journal. So just come in, check out the program, and yeah, I hope to see you in there soon. And I'll see you back here on the live streams next week on Tuesday. Topic TBD. Anyway, I'll see you then. Hope that you have a fantastic weekend and have a profitable rest of the week. Take care. Much love. Peace out.